how a trader is going to find himself in buy positions, know whether they are buy positions, and act accordingly. Do you get it? So we are looking at things like when there's a surge in market price. That means when there's a big push in the market price, and then I intentionally turn on the XAU USD chart so that you see what I'm talking about. When there's a big push in the price of an asset or in the price of anything that you're monitoring, so like gold, silver, GBP, USD, US oil, you have on this current pair is valid and it is going to continue being a buy. You understand? So that's what equilibrium and discount means. And then already we know equilibrium as can you see my screen?
Yes, Brandon.
Okay. So already we know equilibrium as the medium price point. So when you look at a level like this, from this place to this place, the middle of this how do you call it, the middle of this what word is it, the middle of this space is what we call equilibrium. So when we are talking about equilibrium, we are talking about the midpoint of price. And then when we are talking about discounts, we are talking about the lowest point price can go to without going to a value of 0. Do you understand? So discount comes below equilibrium. So let's go straight to the chart. Now, when a trader has a framework of price, and then he analyzes the price and he says, okay, I've analyzed the price and then I think the price is going to be bullish. What makes this analysis true? What makes this thoughts of the trader valid? How do we know that if I lose money in this, I just think this is going to be a bullish price? What makes what he is saying true? That's where equilibrium comes in. Let me admit the person. You're welcome, Daniel. So we were talking about equilibrium and discounts before you came in. That's good. And then I was explaining discounts as the midpoint between price, and equilibrium as the point below the midpoint of price. So when we have a price move, when we have a price leg from this point to this point, right, we are trying to measure at the equilibrium what happens at the equilibrium and what happens at the discount. And then how do we validate our buy positions? How do we see buy orders in the chart and say, okay, I trust this as a buy model because price is at this level. I trust this as a buy model because price has gone to this level. What makes us think and understand that, okay, we are now going to be in a bullish run? So for this purpose, I'm going to use the GBP USD. Wow, GBP USD had a bearish week. This is Friday, Thursday, Wednesday, okay, Tuesday, Monday, still bullish. Okay, so here we go. And since I cannot see the Google Meet interface again, try speaking when I ask a question so that I'll know that you're following. Okay, so on the GBP USD, we can see this as the biggest price swing, right? This whole chart from here, here, all the way to here, we see this as the biggest. And then we say, okay, since we've seen price going up, there's an intention on the part of the market makers, that's the big banks, people who control the prices of the assets we are trading. We can see that they have an intention of pushing price upwards. But what makes us think that, okay, this price that is being pushed upwards, what makes us think is going to continue upwards? Do you understand? So this is where equilibrium and then discount comes in. But before we get all the way here, let's start from here. So let's assume it's a Monday morning. You come on the price charts and then you see this. Starting new. You see this price chart is going up, and then from the look of things, it has an impulsive move. It has huge orders. And when how do we quantify, or how do we identify huge orders? We identify them by how massive the candles are, and then the willingness of price to push away from the level it is currently. So for something like this, we could identify that this is a bearish market because you could see that price was willing to push away from the level it's at. Let me see. Oh, I thought someone wanted to join. We're able to determine this as a bearish market because price was willing. You can see these candles, they are big candles. Okay, starting from this one, 1, 2, 3. Then there was a small candle, small consolidation, a big push downward, went up again, consolidated, and then the push downward started coming. And then look at this one, it came all the way down. You understand? So we were able to identify that this market was going to keep sinking, and then that's going to be the nature of the market. But then here's the case where we are looking for buy positions, we are looking for buy orders, we are looking for places where we can position ourselves in the market that can make us believe that, okay, price is going to continue going upwards, because there are instances like something like this. Let me circle it out. There are instances like this where price went up but it didn't continue going up. You understand? It went up, came down, and then went up again. I'm also going to touch on that, where price mostly does that but then doesn't come down. So now let's look at this. These are points of focus right now. So when we see a price move upwards, an impulsive move upwards or downwards, so what we first do is that we measure. That's why I mentioned equilibrium and discount. We measure the price move. Okay, first it was from here to this place. So in case, okay, someone wants to join, Nana in selfie. Okay, so in case price doesn't want to, in case you went on the chart and then you see this, I've already explained IPDA to you, where I told you market first consolidates, it expands, it retraces, and then it continues the expansion, or it either reverses, continues the expansion. You understand? So we've seen this consolidation over here, right here, you see, and then we've seen a price move sharply away from this price move, or away from this consolidation, and it breaks above the high. And then we can see that this blue candle, or this bullish candle, is impulsive. It has weight, it carries a lot of orders, it carries a lot of liquid, in other words, money. Do you understand? When we see something like this, we have an understanding that price, or the market makers, are intending to push price upwards. So you see this big one, this big candle, and this, mind you, this is the daily time frame. So when we see big moves like this, which breaks and closes above the high, so you can see that this candle closed above the high. You can see that, right? It closed above the high, above this high, you see. it was impulsive, it went up with force, and then it broke above the consolidation zone, and then it closed above the high. You see, it closed above, it didn't wick above it and then come back down, it closed above it. When we say wick, it's something like this. You see, when you see this wick, it means market went up, it came down, it didn't close upward. So all this price action over here is what we call a wick. It tried to enter a certain level, but it didn't enter that level and it came back down. That's what we call a wick. So it wicked up, but this candle didn't wake up. You understand? So what do? We take our Fibonacci, and then I'll teach you how to set the Fibonacci. In fact, I should be sending a screenshot into the chat right now of my Fibonacci settings. So I'm coming. Guys, please, a minute. Come to send my Fibonacci settings into the group for you to see. I'll start from the style. So you can use my Fibonacci settings to set your own Fibonacci, so you see how I see the price. Okay, let me see if there's more. Okay, the invisibility. So guys, please, I've sent the okay. Do you still see my WhatsApp chat? Can you guys hear me? Okay. 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 The recorder I'm using is giving me a wrong. You forget about that. Let's just go straight into it. So this is the Fibonacci chart, and then I've sent the settings so you can copy it and then apply it in your Fibonacci as well. So over here, these settings, we use 0, 0.6181, 0.705, this number, and then -1. Over here, we didn't use the 50% level, but on another Fibonacci chart, I used the 50% level. So I'm going to send a screenshot of just this one to you. So you can do 2 settings of the Fibonacci, you see, but I'll send this after. Now the whole reason why I drew this one up is that we are measuring this impulsive price move. We've seen that, okay, now that it has gone upwards, that means market makers, you understand, the people who make the markets are trying to push price upwards. The people who make the market are trying to push price upwards. It's like you go to a casino, you understand. The games you play there are made by the heads of the casinos. You get it? They are not just games that manufacture themselves in the casinos. You get it? The people, that's why you hear people say things like the house never loses. You understand? Every game the house plays, the house gains from that. From the people participating in that game, you understand. So they made the market, and then they are trying to push price somewhere. Now we have information, we are informed about how the market makers position themselves in the market. We know that when we see such a move, that means price makers are trying to do what? They are trying to expand price higher. So when we see moves like this, when we see impulsive moves like this candle, we understand that, okay, price makers are trying to expand price higher. But at what point do we participate? At what point do those who missed the expansion higher, at what point do they participate? Because yes, we understand that they are pushing price higher, but price has to also be balanced. You understand? It's a market. We can't just get higher prices. That's what people thought was going to happen on gold. And you saw what happened on gold Thursday and Friday. It was crazy. People got slaughtered anyhow. You understand? The price of gold was just falling. 3,000 pips a day. That's a lot. 3,000 pips a day. You understand? So we are looking at price with the intention of, okay, how do we get in? Because price has to balance, it has to be balanced, and it also has to move. You understand? That's where we draw up our Fibonacci. So we measure this whole candle. We measure this whole candle, and then what do we see? We see that, okay, it has expanded higher, it has closed above this wick. So now what's going to happen? We are looking for price to do what? To enter the 50% level. In order to take our buy trades, we are looking for price to show a force or show a move down to the 50% level. You understand? It has to come all the way down to the 50% level. Then we know that, okay, we are going to enter a buy. Now, it doesn't mean any move you see, you start measuring it and then you start looking for a 50% level. No. You understand? I taught earlier. That's why I always post the links in the group so that you have reference. You can go back to this video and say that, okay, this is what he was referring to. Because I started talking about context, the context behind why you place trades, the context behind why you think price is going to do this. Do you understand? So now we have our context. We've seen that, okay, price has been going down for a long time. It has been going down. It took out this low, it took out this low too. Then it started consolidating, and then it showed a massive move upwards. It showed that it wants to go up. Now I'm going to teach you how you catch this move. So now we've circled this price, we've anchored our Fibonacci from the down to the top, and then what do? We leave price to play out. So now price is going to start, you see, price came all the way down to where? To the 50% level. It came all the way down to the 50% level and then went below, and it went towards the 62% level. You understand? It tapped into the 62% level, and then look at what price started. Immediately it came all the way down, tapped into this level. That's the wick over here, the line over here. You can see that at the 62% level. Immediately it tapped into that level, it started raising up again. And then where did it raise to? It raised all the way up and then took out this liquidity. So when we are trading this price chart, what do? We put our entry here. If you are an early entry, if you enter early on price action, this is where your entry is going to be at the 50% level. Why? Because we have an understanding that when market is going up, you understand, so like you go to the market, you see a nice trouser you want to buy, but when you go, you already know the prices of trousers. You don't know the exact price the trouser you are going to buy is, but you have an estimate, you understand. Then you go to the market, and then the guy selling the trouser tells you that it is 5,000 cedis, when you know that, hey, this trouser I'm coming to buy like this, it is 150 or it's 200, you understand. But the seller tells you it is 5,000. What do? Do you immediately remove your money and buy it? Okay, it's 5,000. Okay, boom, I've bought 5,000 cedis trouser. Do you understand? It doesn't make any sense. You get it? So what do? You negotiate. You tell him, okay, this trouser you want to buy, right? You want to sell to me. I like it so much that I am willing to wait for this trouser to come all the way to a discounted price. Are you catching the action now? You get it? So when we see price move upwards with impulse like that, we are saying that, we know that, okay, now that price has moved upwards, we know that it's going to continue moving upwards, but we don't want to be people who just jump on price and say, okay, I got it at this price and then I'm jumping on it. Mind you, it can go up and then reverse. So what do? You reduce your risk by waiting for price to get to the 50% level or discount. Anything at the 62% level or below is a discounted price. I'm going to show you the level I'm talking about. Guys, if you really listen to what I'm saying, and you'll be able to catch bullish entries easily. You enter the market and you see that this thing is going to go up, and then I'm going to trade it to go upwards easily. Just pay attention. Okay, so now we've gone to the market. The seller has given us this price. You can see it's huge, right? It's huge. He has given us, okay, let me not use 5,000. 5,000 is outrageous. Who will sell a trouser for 5,000? Okay, people sell art pieces. That's what they call it. If they want to use the price to shear or trim, they'll tell you it's an art piece. And then they'll come and start showing you the side of the trouser. They'll say this part was stitched, hand stitched, and this part was machine stitched. And they say on this part, this actual part, we went to sit by the sea to stitch it, you know. If people want to sell to you, they'll sell to you, they'll devise any strategy possible, understand? So here's where we pay attention. Let's come back, let's call our attention back. So you see this price move, he has given you a price of 500 cedis instead of 150, and then you are now telling him that, okay, you've given me 150, I don't mind. You've given me 500, I don't mind you telling me this trouser is 500, but what? I'm not going to buy it now, I'm going to wait. You understand? I'm going to wait for the price to fall back to the medium point. That's the equilibrium. So the equilibrium of that trouser would have been 250, right? But I'm not going to immediately jump. I'm going to still wait and see if it can fall below. You understand? I'm going to wait and see if it can still fall below that point. Do you get it? So now we've waited for price, waited, and it has fallen below that point, and it has come all the way to 150 Ghana cedis. Then immediately you give your money to the seller and tell him, okay, this is what I'm going to buy at. So when I buy here, I want to put my stop loss here, or I want to put it here, and then I want to resell this trouser when it gets back to the price of 500 Ghana cedis, or when I see anyone willing to buy the trouser for 500 Ghana cedis. Do you understand? Are you guys getting the concepts now? Okay, 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 okay. So I am willing to buy back, I'm willing to buy the trouser when it gets to a discounted price, or I am willing to buy the trouser when it gets to a discounted price and sell again when it gets to the highest point it got to, in order to make a profit. You understand? So you're a wholesaler, sorry, you're a retailer, you go to the wholesale market and then they give you an outrageous price and you say, okay, this price you've given me, I'm not going to fight with you. I'm just going to sit by you and wait until the price comes back to normal. Then when I buy it, I'll be able to sell it at a higher price so that I can also get my profit. Do you understand? So the whole point of the equilibrium and then the discount is so that we can confirm the framework we have for our buy models, because we can't just see, you know, when you enter forex first, people tell you oh, forex is easy when it's going up. When you see the candlestick going up, you just press buy. When you see it coming down, just press sell. You understand? But in this whole great example over here, in this candle of focus, right? This particular candle, in this candle, right? Look what it did before it went up. It came all the way down. So are you telling me if this candle is coming down, now I'll press sell and then I'll be waiting to take my profits out over here? Then look at it, doesn't go all the way here, it comes all the way here and then reverse and then goes to take out this high. Do you understand? There's no clear direction behind what people say, that when price is coming down, you just sell. When price is going up, you just buy. There has to be a framework. So now what we are saying is that, okay, if we have a framework of markets being bullish, you get it, at which point do we enter a buy position? Because if it is going to be bullish, there has to be something that makes you think is bullish, right? And then yes, a movement upwards. When you see a strong movement upwards, you see that these people are trying to price they are trying to send the price of this particular asset, they are trying to send it high. You understand? Okay, so now we've seen their intention in this candle. We've seen that I see what they are doing here, and then they are sending price higher. So what am I going to do? I am also going to do what? I am also going to wait and plan my buy entry. So what do? You anchor your Fibonacci to the low. Some people even put it here, you see, at the lowest point. But why did I put it here? Why did I leave it to be under this low? I left it to be under this low because it is at this point that we saw the impulsive price move upwards. You see, at this is the point where we saw the impulsive price move upwards. So this is where I am going to do what? I'm going to leave my Fibonacci. So what do? We set our entry here. Price gets all the way here, and then what happens? We place our buy, and then what do? We exit here, please. This is not an outrageous, this is not some, you know what the Instagram tells you? Instagram tells you, like, you just put your entry here, you wait for price to go all the way up. Most of them are doing that back test. They are showing you that on a lower time frame. So when you see like that, you see people extend their profit, take profit all the way. You see people aiming for 1:800. They can do something like this. You see, 1:58, 1:64, and then you'll be seeing that and you'll be thinking, what, this person can trade. They cannot trade. They are making you believe outrageous things, so you end up chasing outrageous things. If you put your buy entry here and then price moves all the way and takes out this high, it is a good place to exit your trade. It is a good place to exit your trade. You don't have to prove to anybody that you are a trader who is trading 1:84, 1:75, 1:150. Your goal in the market is to make money. So when you come in there, let me see how many pips this is. That's 114 pips. That's a good amount of pips. 114 pips a day. If you make that money, if you make that amount of pips a day, and this was what? This was a Tuesday candle. So imagine a Tuesday candle giving you 114 pips. You see 114, you don't have to hold a position for it to reach for it to reach a whole new all-time high. That's if you are, and it's also based on the type of trader you are. If you're a scalper, you are looking to get out of old short-term highs. If you're a day trader or an intraday trader, you are targeting previous day highs, previous week highs. Do you understand? If you're a swing trader, you are targeting long-term highs, short-term lows, long-term highs, short-term lows. If you're a position trader, you are targeting all-time highs, all-time lows, long-term. Yeah, you are also targeting long-term highs. Do you understand? So you have to understand the type of trader you are, and then I'll start doing that series when we start the trading plan development series. Do you understand? So by the time we are done, you guys would have been able to read price charts and then be making money out of price. But please, it's not going to, you see how I'm teaching you right now, it's not going to be okay, you've listened to this and that's all. You understand how to position yourself for a buy trade. That's not how it is. You would have to go back and listen, because there are certain details that you've missed, you didn't understand. And then I believe you going back to listen again will build your patience, because now you understand what I'm telling you. You will not be falling for inaccurate price action. In other words, you see a certain price action and say, oh, this is what Desmond talked about, and then I can buy this at this point. No, you have to listen again and look at exactly what I'm talking about, and also you back test. If you cannot back test, you forward test. So when you see it happening in price at a certain point, then you do what you see. This is what he talked about, and this is how I can take my trade. You see. So what we do when we put on buy positions in this order, is to what? Is to exit at the previous high, the high that was made before the price started dropping again. Do you understand? So I'm going to give you another scenario. This was just the short one. I'm going to allow price to play out, and then we'll see another description of what I was talking about. Now we've seen price do what? Price go all the way here. It has gone all the way to the top, and it is still a bullish run. You can tell it is a bullish run because, let me cut it back so you see what I'm telling. You can tell it is a bullish run because it is at this point that price or market makers push price all the way up. So the more price is going up, the more you have a framework, or the more price is going up, the more you have this idea that if price is going up, that means the market makers want to continue pushing price upwards. They want to make sure they see higher prices. They want to fill their pockets. Do you understand? So what you do now is that, okay, we've seen price go all the way here. So what are we going to do? We are going to keep extending. Now we don't focus over here. We've already dealt with this one, and then we've made our money. Do you understand? So we keep extending. Okay, when we extended it here, we didn't see price come all the way to the 50% level. Therefore, we do not have a trade. Are you guys understanding? We've not seen, after price went to this high, it took out this high, it went again, we extended our Fibonacci, it went again, extended our Fibonacci. At which point do we continue for buy orders? We continue for buy orders when we see price come all the way to the 50% level. Do you understand? Or below. So that is a level like this. And then I was telling you the discount level, some people call it optimal trade entry, OTE. if you, some people to call it the sweet spot. When you get price at the sweet spot, that's a discount level. So when you go to the market, like let's take the promotion that happens on the festive seasons like this. When you go to the market during December, you see that they've reduced the price of items. You understand? That's the sweet price. You will not get it. You will not get it at that price until the next festive season. Do you understand how it works now? You see, so this is the sweet spot. Optimal trade. That means you are relaxing, waiting for the trade, and then it came to your optimal level for you to take the trade. You understand? So we didn't see, when we extended our Fibonacci, we didn't see price come all the way to the 50. When we extended it here too, we didn't see price come all the way to the 50. And mind you, this doesn't count. Why? Because we've extended it above this. So if we extend it above this and then we see that, okay, this level is in the 50% or in the discount level, we are not just going to jump in and take a trade because we've seen it here. No, we are going to wait for the price to come from where it has been into our what? Into our 50% level or lower, or the discount level. Do you get it now? So now let's see what price did. So what am I going to do as someone who likes to get price at the discount level? What I'm going to do is I'm going to place my entry at the 62% level rather than the what? Rather than the 50% level, and then I'll extend my price all the way to, I won't put it, if I didn't see this order block. And then for those who don't know what order block is, please go back and watch the only 4 elements you need to finding a trade setup. You find it in the, I think it's month 1. Yeah, month 1. You find it in the month 1 video. I'll not put it all the way below the 100%. Most people push it all the way down to this level, to the swing low. And there are points when you do that. That's when you don't see this bullish order block. But because I know about this order block, I know the existence of it, and I know what it does, I can leave it here and say, okay, I'm going to enter the 62% level and leave my stop loss here. Then I'm going to extend the take profit again. You don't have to wait all the way to extend your take profit all the way to 800,000 pips. Do you understand? Again, I'm going to reiterate on what I said, because Instagram, when you go on Instagram and then you're watching all those backtesting sessions, right, they make you believe that you have to be looking for 1:8,000, 1:64, 1:70 something. The whole point of the forex market is that it's a risk market. Anything you get above what you've initially risked, right, you've gained. You have the right to pull it out of the market. Do you understand? So traders come inside and say, okay, I put $100, I place a trade, I have 130 in a day. In a day, you've put $100 in your account. In a day, you've traded and you've gotten 130. That's 30% of your initial money invested. That's 30% in a day. But because now the trader believes that, okay, I have to wait for price to do what? To go all the way 1:500. And yes, you can get all those. You can get 1:500. It's easy. If you know how to read price action, it's easy to get 1:64, 1:70, 1:50. Do you understand? But here is the case where we apply trading in we approach trading in the market with a risk mindset. We understand that, okay, I have put $100 in my account. I've had a chance to gain 30% of my risk capital. What do I have to do? And then I can get out at this point and then gain, let's say 70, because this is 1:7, right? That means you are gaining 70% of that one you risked. You are not gaining the whole one. Sorry, you've gained the one and you've gained a 70% more on it. So let's say you risk $30, right? You've not only just gained that $30, you've gained that $30, but you've gained 70% more of that $30. That would be like 22, 3, 4 thereabouts. You understand? So you've gained 70% more of that one that you've risked. You can remove your money, okay? You can close the trade. And then if that trade ends over here, it's a good, because price moves from old highs to old lows. Again, liquidity is the blood of the market. As a human being, you can't run without blood. If that's why if they shoot you, sometimes you can stay alive, but you cannot stay alive if the price, like you see in the movies, they shoot someone, the person is alive, he knows that he has a certain time, he has up to a certain time until he dies. Why? Because let's say they've shot a vital place and that place contains a lot of blood. He knows he has until, let's say, 3 minutes before he dies. Why? Because he understands that when the blood comes out of, when all the blood comes out of him. Oh, who tried to join? Okay. Because he understands that when all the blood comes out of him, right? When all the blood comes out of him, he is going to what? He is going to die. Do you get what I'm saying? So now, what do we do? What do we do? We know that price moves from old highs to old lows. So we set our take profit where? At the old high. Do you understand why? Because now we understand that market makers are trying to push price higher, but we don't know the level to which they want to push the price to. Have you seen the emerging point? Yes, we know that market makers are trying to push price higher, but we don't know to which extent they want to push price to. So what are we going to do now? Now we are going to say, okay, we don't know that price is going to come all the way here, but we are going to leave our take profit here. That means if price goes all the way here, takes out this high, you are not going to take out that money. You are going to wait for it to come all the way here. And then there are cases where markets gets to this point or price gets to this point and then reverses. That means the money you've made when price came all the way to this high, you've lost it. You understand? And then the forex market is not a certain market. It's not a market that guarantees you your money. You can have $10,000 inside that market, inside your account, but your broker is just looking at you laughing. He's just laughing at you. Look at him. He thinks that money is for. And so if you join that money, it's not for you. It is risk capital. That's why when traders trade money, when traders deposit their money, you are required not to be attached to that money. Why? Because you understand that it's a risk capital. Before you put that money there, you understood that this money is dead. You understand? It's not alive to you. It's not money that's the seed that you've sown to get more money. Do you understand? And then the seed is believed to be dead. Do you understand? It's dead. That is dead. You have no access to that money. You understand? What you have access to is the returns of that money. You have access to harvest the fruit that money brings. Do you get it? So we leave our take profits here. Why? Because we are not certain they are going to take price all the way here. You understand? We leave our take profit setting, or if you want to extend it a little bit, you can put it above this or at this high. You see this high? That's for people insist on having double of what they risk. So when you put it above this high, you can see that over here it says 1:2 what? 1:2. So you are getting twice of what you've risked. 2.09 actually. You see, so if you raise $100, you want to make $200, $209. You understand? So you put it over here, and me myself, I mostly look out for 1:2. You understand? But at the point where I'm not sure of where price is trying to go to, then I leave it over here. You understand? I'm not going to try and be some superhero that is, as for me, I'm chasing 1:80. No. Me, I came to the forex market to make money, and then I understand that the larger my capital grows, the larger I'll be able to risk, and then the more money I'll be able to make. So I'm not in a hurry to make a lot of money with small initial risk or risk capital. Do you understand? So we've left it here. Let's see what price does. Let's put the speed at 5. Perfect. Now, there's a different way you can approach this. Understand? In this whole price leg, that's from this low to this high, we can circle this point. Let's intentionally remove this. So from this low to this high, from this low all the way to this high, we can see that there is an internal range liquidity. Now, I told you initially that price moves from highs to lows. If you're able to catch this, you understand why gold dropped Thursday and Friday, because gold was doing a killing. If you watch the gold chart, you know that gold did a serious killing. People lost their monies, you understand? And then people killed themselves too. I don't know if you've read the news, you understand? People killed themselves because they were so sure of themselves that gold is going to reach 6K by February. It's going to reach 6K. Gold didn't. Wait, let me be sure. Let me be sure. See. You see, gold didn't reach 6K. It got to 5598.13. You see? $5598.13. That's where gold got to. And then it synced. It synced all the way to 5,300. That's like 3,000 pips. 3,000 pips, guys. That's 3,000 pips. 3,000 pips is no joke. If you were able to catch that move, you'd be swimming in money. Understand? So price moves from highs to lows. So when price is coming down, we can put this over here. Now, how do we become extra sure of where price is going to go to? Now that you've put this line here, and we understand that price moves from liquidity to liquidity. That's old highs, old lows, or internal range highs and internal range lows. Look at this is a swing low. You understand? This is a low. This is a low. A swing low. This is a low. So we have an understanding that okay, if we've put this line over here, and then we are suspecting price to come all the way here to take out this low, and we've also anchored our Fibonacci here. You understand? That means I can take action when price gets to the 50% level, but I'm not going to wait for it to get all the way to the 50%. I'm not going to take the trade at 50% level and risking a lot of money. What I'm going to do is I'm going to pull it all the way down to the 62, or I'm going to leave it at where the swing low is. You understand? I'm giving you an entry model, guys. This is top-notch information. Don't take it for a joke. You understand? So I'm going to leave it at where the internal range low is. You understand? So now we have it at the low, and look at what happened to price. So I'm going to remove the low. I'm going to remove the low. You see that price will come down, take out this low, take this low out. Boom, over there, it took out that low and even entered the what? So in case you don't know how to take an entry off of the order block, in case you are not solid in this thing in the IPDA, because what I thought first is I thought IPDA first. I thought IPDA because I wanted you to understand the framework of price. You understand? I wanted you to understand how what do we call it? Market is built up. Do you understand? When you want to take price to a certain level, how it is built. You understand? So in case you are not familiar, or you've tried IPD and you cannot, what you do is you wait for an impulsive move in price. You wait for market makers to show you their intention in price. That's why Forex cannot be traded like impulsively. You cannot be someone who waits for results, like you are waiting. You can't wait for something to come. You have to be extremely patient, because in this move, people can say, oh, okay, now I've seen it has gone all the way from here. I didn't catch it. It came down. It went up again. I didn't catch it. So now what am I going to do? I'm going to buy at this point. You see this point? See this point? This is where people are going to buy at, and they'll enter their entry here. And market will tell them, ha 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 ha, I knew you would do this. Then it will drop. You see, for those who are informed, this is what happens to you. you are on the right side of market, because if you cannot take your entry on IPDA, if I was taking on IPDA, I'd have put my entry here, because I know that, okay, this order block, that's the order block, that's the order block, that's the order block. I can bring it all the way here, but price didn't come all the way there, so I'd have missed my entry. So I add this one to it as the order block, you see. So let's go back and then let's measure this one, and let me show you the IPDA point. The IPDA shows that the order block is found at or around the what, the 50% level. Look at where is the order block at. Look at this, from this consolidation low to this consolidation high before market broke out. Where's the order block? It's around the midpoint. Can you see that? So let me vanish this one so that you can see well. So you see this, but the thing is that people are not patient. I've taught a lot of people the IPDA models. Some people, I meet them physically to teach them, but they still can't get it. It's not like they can't get it, they are not patient, that's all. Because now that price is going, they'll see that, oh, you see, this month price is not going to come to the order block again, it's not going to come to that 50% level thing that you taught me. But look at this, didn't it come? How many days did it take? 1 2 3 4 5 6 7 8 9 10 11 days. So let's assume you waited 11 days to catch 264 pips. If you have a good lot size, this is a lot of money to wait for 11 days to make. If you can, if you took this trade on a, let's say, micro lot, mini lot, this would have been $200. Let's say you take this trade on just a mini lot, that's 0.1. Do you understand? 0.1, not 0.01. 0.01 is micro lot. If you've watched the previous videos, I explained what those things are. 0.01 is micro lot, 0.1 is mini lot. If you took this trade on a mini lot, you would have been making $200. You waited 11 days to make $200. $200 is like 2 point something K in Ghana cedis. That's more money than what people are working tirelessly to make. You understand? And how did you make that money? By what? By sitting down and folding your arms and just watching the chart. If you make any move before the time to make that move, you get it. So let's go back to the point where we didn't leave the hype. So now you see, we use the equilibrium and then the discount level to do what? To make this up. And then when we made it up, where did we exit? We exited where the high is. Do you understand? And what happened? Price took out the high and started coming down low again. This is what happens to people. Guys, sorry, I have some serious cold. I don't want to, blow my nose, because it will come in the audio when I post it on YouTube. Imagine listening to a teaching, then you hear you just get distracted. You understand? Sorry. You see this. So this is where people get flipped out. When price takes out the high, instead of them to remove their money, don't remove it. You see, don't remove it. They'll say, I'm waiting for more. Maybe they extended it all the way here. They'll say, I'm waiting for more. And look at this, price was very close to hitting that take profit target. Do you understand? That take profit target. But look, it didn't hit it. It was left with what? 29 pips, 28 pips, approximately 29 pips to hit that high. And then it didn't hit, and it came all the way down to this point. When it comes all the way down to this point, they start panicking. They start saying, shit, hey, I got a chance to make $200. I didn't take it. Now look at this, price has come all the way down. Then they rather liquidate their positions here. Why? Because they are afraid. When all this while, when price came all the way up here, you could have moved your stop loss here to protect your risk capital. I'm making noise because I've fallen to this thing many times. You understand? So when I'm speaking like this, in a way, I'm speaking to myself to remind myself my strategies, you understand? Because if you are going to make money in the forex market, you have to have serious strategies. Because see, the people that you are playing against, then let me tell you, they are mathematicians of the highest orders, of the highest order of mathematics. They are statisticians or statisticians or whatever their names are. They are highly educated when it comes to statistics. So all you are looking for is to what? Is to be exiting at old highs and old lows. Because they've perfectly engineered this algorithm. Listen, the market you are seeing here is not just data. People came together to devise these things. Psychologists, statisticians or statisticians, mathematicians, behavioral experts, people who monitor the behaviors of people. See, you could have exited here, but what they do, they fake it out small. You understand? It goes from highs to lows, so they fake it out small to come all the way here, and people will take out their orders here. Or some people will rather enter a sell position, because they've seen that since price has taken out this high, it's going to come all the way down again. So they enter a sell position, and look at this, it comes all the way down, then it retraces. It doesn't stay down, or it doesn't stay going down. What does it do? It goes down again. People believe, okay, now it's going to do, it's going to keep going down. No, it doesn't go down. No, boom. What does it do? Boom. You understand? So the whole point of getting out of the market at old highs and old lows is that we are not so sure where the market is going to go, because we don't control it. However, we know the prints in price. We know how price prints itself, so much so that we can predict up to a certain level where price is going to go to. Do you get what I'm saying? So now we exited over here. Everything else aside this is none of our business. And look at this. It even took us less time for price to hit our take profits, rather than waiting for price to come all the way here, or even here, to say that we are going. In all this stage, you might panic, because now you've seen three bearish candles. Shit, I should have exited. Shit, now look at me. Now look at me, look at me. You understand? Look at me, look at me. Then you see that, price wasn't even going to go down. So now in panic, you sell. Then you sell. You say, because price is going to go down, because price has shown three bearish candles, I'm going to do what? I'm going to chase it downwards. Then you chase it downwards, then what happened? You just mess up your account. Why? Because now price has gone up again. Do you understand? So we have a framework. First, we have a framework. Guys, please, when you enter charts, enter with the approach that you are developing a framework to take a trade. You are not just going to trade, you are developing a framework. Okay, I've seen price do what? Move upwards sharply. Now what is going to happen? I am going to wait for it to come to a 50%. If you don't see that, you don't trade. It doesn't matter if the analysis you've done after hits the level you were aiming for. That's why people don't have just one strategy to trade in price action. They have like 3, 4. Myself, I showed Jaffe the last time, I have like 7 strategies. But amongst all those 7 strategies, right now, I use just one. You understand? And then that one, I stick to it consistently for a period of time. Do you understand? So I'm not saying, okay, today I didn't see a NYKZ, so what? I'm going to look out for IPDA. No. From this period of time to this period of time, I'm trading only NYKZ. I'm not trading IPDA. I swear I'm not trading IPDA. No matter how enticing IPDA comes to me, I'm not going to trade it, because now you will not know the level of effectiveness NYKZ has. Why? Because today you traded NYKZ, so you traded IPDA. Now you are trading it simultaneously. Now, if you take a loss on NYKZ, you'll be waiting for IPDA. Whereas in certain times, IPDA is going to form in a way you are not even going to see it well. Then you think it's going to go this way, then you take the trade. Then what does it do? It blasts on you. Do you understand? It blasts on you, totally blasts on you. So guys, you look out for what? Old highs and old lows. This is my exit system. I'm looking for price to hit an old high or a predetermined price point, then I exit the market. Every other thing that happens from there does not concern me. I don't give a fuck about it. Do you understand? Now, I exited this trade in 3 days. That's day 1, day 2, day 3. You see, these 3 days. One, 2, 3, these 3 days. Now I have the mental clarity to sit down and plan my next trade. You understand? So that means I'm not okay, click, I want to enter another price. No. Now what again? We've seen that what price moves from old highs to old lows, and then when price moves sharply from a certain point, that means what market makers are trying to push the price to that point. They are trying to push the price to that direction in which they are pushing it. So here again, we measure this leg from this low to this high. From this low to this high. Wait, let me see. Hope you guys can see my screen. Hope you guys can see my screen. Okay. I'll send it back to the trading. I'll send it back to the trading view. Don't fear. I wish I didn't update this laptop, man. This new iOS, this thing is terrible. It just makes my machine slow and it's chopping my battery. Such a useless update. Such a very, very useless update. So now, look, impulsive price moves. Impulsive price moves, you see. Now what do we see? We see that, okay, price came all the way and moved away sharply. Moved sharply. And then what did he do? He went to take out this high. So now we can take another risk. I'm telling you, it's not sure. You are taking risk. So now what do? You can put your entry here, 50% level. If you are someone who is able to risk big and afford big risks, you can put your entry at the 50%, because I was saying initially that when price gets to a 50%, you understand, when price gets to 50%, you have the right to trade that price. You understand? You have the right to trade it and say, okay, I'm going to trade it. If you are impatient to wait for the setup, at least be patient to wait for it to get to only 50%, then you add your position. When it goes below, let's say up to 62%, you can add another position. You can add another position. That's by the risk you have determined to take. You understand? Nobody will force you to add that position. If you believe you can take on that risk, then you can add another position. But there are cases where price gets to the 50% level and then booms off. You understand? So now we draw it. As for us here, for so we like discount. So what do? We come all the way to, there is somebody trying to join. Okay, someone has joined again. We come all the way to what? All the way to 62% level, and then what? We target the high again, guys. Again, we are not trying to prove to anyone that we can take 88 risk to return. We are not trying to prove to anyone. We target the highs. This is how many pips? 186. It took you how many days? 3 days. And then in these 3 days, if you go on the lower time frame, you can catch numerous setups on the lower time frame. You understand? So now this is done. Let's continue, and then I'll be done shortly. Just stick with me for some small time. It will come into this level and then continues going up. Coming to the, okay, took out this low. So now, if you are looking for a case where you want to get a swing projection, this is what we call it swing projection. So again, the first Fibonacci setup I sent to you, right, is to show you the first one I sent in the group was for a swing projection. So this is what we call a swing projection. You can see that means this swing from this low to this high, right, it multiplies itself. It's like it takes itself and then it pastes it again. Do you understand? Let me see if you guys get it. Do you understand? It's like it takes. Nanes, if your hand is up, please, you can speak. Please, you can speak. Nanes, if your hand is up. Okay, I'm assuming it's a mistake. So price takes itself, like let's say from this level to this level, it takes itself and then it pastes it again. That's what we call swing projection. We are projecting the swing. So if we stick to our swing projection, right? If we took our entry here and we say, you see today I'm too sure that price is going to do a swing projection, then we extend our take profit here. You understand? But for that, you would have to be extremely patient. How many pips is this? 588 pips. You are done. If you trade this on a let's say 3 micro lots, right? 3 micro lots, that's $1,500. $1,500. You're in Ghana making that money. And it took you how many days? 22 bars. It took you like 22 days to make $1,500. You are making more than people who are doing certain kinds of work, who have gone to educate themselves very, very well. And some people in the group have told me, have tried to advise me about NSS. I despise NSS with every blood in me. I don't like it. I just cannot understand why I should be going up and down. I can do it for the experience, fine. Yes, I can do it to have some kind of structure in my life. In other words, waking up early, being accountable, submitting things. But Charlie, I can't just be doing that traffic up and down, running up and down, and then come and take 715 CDs. I despise it so much. People are trying to tell me, if you don't do it, you won't gain employment. I'm not looking for employment. I'm not looking for employment. I just don't like the idea of being employed. I don't like it. I'll sit at home and do my work. I'll rather wait for 15 days to find my setup that will give me money that will take you a whole year plus to gather, and then I'll wait for 22 days to cash out that money. You understand? So I'm not trying to say this to undermine those doing NSS. To undermine those doing NSS. I'm just saying that for the kind of person I am, it doesn't suit me, so I don't like to do it. You understand? If you are doing NSS, please don't allow what I'm saying influence you to have a certain kind of, attitude towards it. If you are in it already, just do it. Like you started, you might as well finish the fight. Understand? At least you will be having a structure, because I'm terrible at waking up early, I swear. I can wake up like 8 o'clock, 9, 10, sometimes 11, because sometimes I'll be doing researches anyway. I'm talking of unimportant stuff here. 8, 9, 10, 11, and then I'll be waking up at that time. At least you have an advantage over me. Landing session gives a lot of setups, so if you're able to wake up early, appreciate it, because I jealous people who are able to wake up early. As for them, they set alarm. When it's 4, it rings 4, and then they wake up. They don't want to sleep again. I look at these people as superhumans, because I jealous their ability, honestly. Understand? So the good things NSS brings, they are good, and they benefit those it benefits. But for other people, you just understand that some things are just not for you. If you try to fight it, you end up going in a circle. You understand? A circle with no end. So you just keep moving, and then you don't find a place for yourself. So you see, now we've seen the intention of market makers. They push price higher, and then price just keeps. Yes. Say again. Okay. Yeah, please ask your question. Say again. Yes, we can hear you.
Question is, since there's a leader at this point here, I kind of wish, I know this might be a little demanding, and then it might take your personal time since they are leading us on this trading journey or mentoring us. These certain things or certain market hiccups would appreciate if you give us a little heads up about, because I think majority of us, including myself, are still learning right now. You get me? This with the gold crash that happened last week. I personally made a mistake and I blew my account, even though it wasn't anything serious. I wish I got a little bit of guidance to, oh, Charlie, the way you want
Me too, make her
to
add out. Make her add out.
so you know, be me, fair. Okay, more quality here.
It
A
go
bit of
be, it go
information to
be.
get.
Paul said it go be, it go be. See, it go be for us all. Okay, please continue. I'm listening to you.
So yeah, I think with that one, I'd appreciate that even though it would be a little demanding. And also, we also get this information from the internet saying when you're not profitable, it's good to get at least is it a stable source of income like a job or something first. So I just want to ask if we go do this thing talk, you just say more not take them and it's that serious or you say what's that.
Ah, oh, you see me, I kind of get a different approach for this whole thing, Ideba, because I believe I have the skill. You understand? And let me tell, because most people have approached me and then they tell me that, okay, since you say you're a trader, open your live account and let's see. And then I open my MetaTrader and there's no money there and they get confused. You understand? I have the skill. So what I do is, yes, they say you have to have another source of income. I have the skill. I believe I have the skill. I have tested, back tested, and then I've tested on live chats. So what I do is to prevent, because I found out that I am very impulsive when I have to trade. Do you understand? I just go inside and then boom, boom, I want to find something in the market. So I push myself to you understand? I push myself to certain points where I blow accounts. And then I've blown serious accounts. See, I've blown $1,000 account before. So it's not uh, blowing accounts is normal, it's part of the process. But when you come to the realization that wow, you have the skill. So what I do now is that I plan my trade, like the one I showed you. I plan it, I carefully sit down and plan it, and then I wait. Because now I don't have money to trade. So I'm not in the chat trying to force myself to trade. I'm teaching myself discipline, right? I'm teaching myself patience. I'm teaching myself discipline. So what I do is I know friends who have money. Then what I tell them is that, see, guy, you already know I trade Forex. I've seen a serious move that is going to happen in the market, but I'm waiting for this setup to form. I want to ask you for this amount of money. So when I see the setup, I start telling them before the day comes. Do you understand? I see that this setup is going to form and then it's going to do this thing, it's going to do this move. However, it is a risk. So I'll need what? I'll need $500 from you. Can you provide? If they say pay, that's all. Do you understand? I just sit down and then wait. I just wait, and then see what is happening in the price chart. Because now I'm in school. Then I can't be forcing myself to, you understand? I can't be forcing myself to, whilst I'm in class, I'll be watching the chart and trying to force a trade. You understand? You are just putting yourself in disaster. You are putting your mind in disaster because now you lose that money and you start thinking, hey, I've lost that money. I have to revenge this money. I have to revenge it. I have to get this money back. You who that you are watching, you know what I'm talking about. You don't tell yourself, oh, but that's what happens to you because you are looking at the price chart. You are saying, hey, me free no and they call baby, I make us say, call. Hey, see, I have to get this money back tomorrow. In fact, sometimes you don't even wait for tomorrow. You sit there and you say, hey, I'm going to lash this market. Then you enter the trade and then lash you again. Then you just go and sleep. You don't want to eat. You don't want to do it. You just go and sleep. You understand? So I'm teaching myself discipline. I'm teaching myself patience. That's why I said, just go back to the videos, watch them, backtest them, watch them happen in price. Don't be in a hurry to make the money. If you have the skill, you will make the money. So me and my friends, we break bread. So if you can give me $500, what I promise him is that I can get you up to $300, and whatever I get on that money, whatever I get on that $300 is mine. So sometimes I can make like $700, right? And then I give him back $800. You understand? And then I take $400. That $400, sometimes I put some down to fund my own account. Sometimes and then I'm someone who is very generous. I tend to help people a lot. So when I get money like that, I contact some of my friends who I know they will need that money, and I say, oh, see, I get this amount to. Abi, you tell me say this level, so you make I give you this one, make you take. You understand? But that's just by the way. Follow the skill, guys. Follow the understanding of the skill. There's a scripture that says, for with all you have, gain understanding. That means purchase your understanding. But you cannot go and use money to purchase the understanding. Some people use money. You pay people to teach you. You understand? I myself, I'm forming this community as people who just have to, we have to ruthlessly understand the market and we'll make money. Do you understand? We'll make money. It's just patience. Forget about all these things that people are posting online. Close your eyes. See, me myself, I'm not on TikTok, I'm not on Snapchat. I'm there sometimes. I'm not on Snapchat. The only platform I'm active on is WhatsApp. Intentionally, I'm disciplining myself because I know that if I go and see Asimesis trade, it will start putting in my mind that, hey, Charlie, see this person say if they win, or hey, I for look sharp and go fund my account and do what, and then I for trade and then I for get some big money. You understand? Yeah, I intentionally unfollowed all these top forex traders. Although they are good, they have wisdom, they have knowledge that they can impact in me from just their videos. I intentionally quit everything and then I'm just focusing on the person who is teaching me. My focus is just on him, listening to whatever he's telling me, and then in my way, in my own way, I'm sharing it to you guys so that you guys can also understand the market, so we make money together. You understand? So yes, you can do works that will give you money, but that money, understand that it has to have a plan behind it. You have to plan the trade. So sometimes I have money, I don't trade it until my setup is forming, because I know that if I deposit that money, there will be that temptation to trade that money. So I'm extinguishing that temptation. I'll by all means get to levels where I'll by all means get to levels where I'll have money in my account constantly and then I'll be trading them actively every day. You understand? And one of my friends who have been doing this for me is called Solo. I know most of you don't know him. He's not even in the community. He's just a guy who understands that this is what Desmond does and then it's a risk. So when I text him, yo guy, this be the level, oh, then he's telling me active. He starts looking for the money because he will get his share. We'll break the bread together, you understand? So yes, you can work for the money. You can let people know that this is what you do. And not just everybody. You really have to sit down with people who have an understanding mind. And then you do that by observing them. Observe how they move. You know that no, this person has a different level of understanding. Let me tell him this is what I do. You understand? And then as time goes on, I'll form a small team where I'll be sending my setups before I take a trade. But that will be dependent on the level of understanding you guys have. So please, if you have the chance, go back to the video and watch them so that I'll have this team. And then also you said I should be giving heads up, right? And yes, I will be doing that, right? But I'm just a single person. I'm an individual. I cannot expand my mind. Me, for instance, I didn't have a very social childhood. So my mind is just one way focus. I'm just thinking of, okay, I'm going to teach you, I'm going to deliver. Anytime I set the date to teach, I'll deliver. You understand? However, last time Japheth told me that he wants to suggest that we have a a partner. That means when session is about to start, you text somebody, and then the person can also text you and say, okay, let's all join. You understand? And it was a very brilliant idea. I only have the understanding of markets. Sometimes I cannot imagine these things. Then I'm happy when you guys are able to imagine these things, because I'm like, Charlie, you people are also different set of humans. You have different sets of understandings. You understand? It's a community. You are going to come together to build it. It's going to be a strong community. I believe so. I have the faith for it, and then I have the work for it, and I'll do it. You understand? So if you have suggestions, let me know. And then since you've talked about it, I'll start highlighting levels where I think price is going to reach. Then I'll be sending it in the group chat. And also, if you guys have different platforms that you think will be effective, because I think the WhatsApp is not very effective, because people have a lot of school groups, a lot of what groups, that when I send my own message into the community, people might not see it. They might skip them. You understand? So I understand it's a growing community, and then thank God for Nana Sylvie, Jafet, Daniel, Paul. You all have given wonderful contributions. I remember, if you leave me, I'll talk some, but let me finish this first before we go to the talking part. I'll use the talking part to end. You understand? So this is it now. How about this one? How about this price point? How about here? How about here? Let's see here. Okay, now we've dealt with this place. Now let's see here. Again, if you want to be anchoring your Fibonacci, you want to anchor it to points where there has been an impulsive price move. It's like, you see when an elephant steps into a water, you understand? You see how the water will splash big. It will be bigger than you, a human being, stomping into that water. Do you understand? Yes. So now let's even use this as an example. We pull it over here. We wait for price to get into the 50% level. It didn't get into the 50% level. So what? We do not take a trade. That is, if you are taking your trade based off of only equilibrium and discounts. There are points where you can take your trade here. Someone will find an IPDA here, and it will be best for him. But that's the method you are using. So what I'm doing is I'm giving you different ways to view price, because I understand not everybody understands IPD. IPD is a bit technical. Understand? How about here? We saw price give an impulsive move upwards, big candles. So what do? We wait for price to do what? To try and get to 50% level, or all the way to 60. Okay, pause. It went all the way up. Now what does it do? It enters the 50% level. Let's see if it will come lower. Boom. As for this one, it didn't stop at 62. It came all the way to close to 79. And then what I like to believe is that when price comes below 79 and it's still pushing below 79, like you can see it's pushing with force, most times the trade is invalid. You understand? But that will take experience, because if I tell you like this, you can just go and see, okay, now price has gone below the 79, and then you liquidate your position. No, sometimes it goes below the 79, then it goes back up. You understand? It will take a lot of back testing and experience for you to be able to determine that. You, you see, so I can put my, yeah, Jafet, please speak.
Um, yeah, what if, let's say, there's another which is below the 70?
Exactly.
For example, like this in your chart, there's another below the 79.
This one, right? This is what you are talking about, right? Hello.
Sorry, my network broke.
Okay,
Yeah,
okay.
yeah.
This is what you are talking about. Exactly. That's why over here too, if you can remember, I put the order block, I put the the stop loss below the order block. So now when it gets to points where it goes below the 79% level, you can trust that order block to hold. Do you understand? People who don't have a lot of risk capital, they like to buy at a very low price. So what they do is they can bring entry all the way here. Do you understand? And then wait for price to enter. But here is the case where we cannot always guarantee that price will enter. Can you see that? So, Japheth, you see that price didn't enter all the way at the order block. Price didn't come all the way to the order block to enter. So what we do is we can trust these levels, these discount levels. That is from 62 to 79% level. And then I know that Japheth goes back to watch the videos a lot. You know, sometimes Japheth personally texts me to ask questions. And please, guys, I'm always welcome to questions. You can send me questions anytime. If I'm awake and then I can see it and then I'm not having things on my in front of me to do, I'll just immediately answer your question. Okay, so please look at this 62 to 79% level. That is what the discount level. You can take your trade over there. And what we normally do is that we are not always sure that price will come. Sometimes price doesn't come below the 79% level. But what we do is that we can open one position here and say that, okay, if price comes down again over here, then what do? We take another position. Do you understand? So now we'll leave this one here because today we are focusing on what? Equilibrium and discount. In a way, I didn't want to talk about order block, but we happen to enter into it and put my stop loss here or what at the 100% and aim for the high. So you see, this one gave us 2 is to 2, 1 is to 2.42, and then it gave us a beautiful pip movement. Look at that. Look at that. That's beautiful. That is very, very beautiful. How many pips? 462 pips. And it took us how many days? It took us 1, 2, 3, 4, 5, 6 days. It took us 6 days. Let's see if we make a swing projection. Let's see if it will be able to go to our swing projection. Let's just see. So on the swing projection, it hits the 27%. Let's see if it gets to the 62. Let's see. Let's speed this up a little bit. So it goes above the 27. Boom. Almost at the 62. It takes out the 62. Almost at the 100%. But you see, for all this, you can do it if you have the patience. You understand me? I'm just looking for manual. I'm not. I don't trade to look for world best trader title. I'm on the. In case, let me clear my throat. I'm on the forex market to cash out, the money I can cash out. So what do? I always look for the opportunity to refine my skill. Every day I'm learning. Every day I'm trying to find something in price. I'm trying to look for something in price. So every day I come to new realizations. Do you understand? So yes. And guys, if you've heard of good trading books online, if you don't, okay, I'll begin to send books into the group. If you don't have, and then please, the group, forget those who are not texting inside. If you are really following and you're understanding it, forget everybody. Just type it in the group. I've heard of this book. Who has it? And send it inside. If I have it, I'll send it quick because you have to gain the knowledge. And I was telling you that if you have the knowledge, you can approach anybody and tell them, see, because it's not like you are trying to force confidence. You are already it. You understand? Like, I'm a trader already. I don't have to come and sit down and I'll now be telling the person, I trade forex and like I'm trying to portray some level of confidence. No, I am it already, and I've proven it to that friend of mine solo that no, I can do this. So when I tell him about it, he trusts it. Although there are times where we hit stop loss before. Yes, a certain time came, we blew an account, but we've had more wins than losses. Do you understand? So yes, always gain the knowledge. Forget who is not texting in the group. Text it. See, I've heard of this book. I heard it's good. Who has read it? Is it good? Do you have it? Can you send it here? If you cannot get there, and in Ghana, we mostly don't have access to hardback trading books. We have online trading books, so I can send you, I have a lot of trading books. I can be sending them one by one. I don't want to send them plenty because you get overwhelmed. It's like you have options, so you don't know which one to read first. So I can start by sending one. You understand? So please, the group is for everybody. Text inside. Don't look at what somebody is doing. Oh, and think about it. If you have the knowledge, you can get the money. So now you want to send a message in the group, and then now you're thinking, what do people think about me and things? Forget about people. If you get the money, they'll rather come to you for you to teach them. You understand? So please, the knowledge is topmost priority. And then if you have suggestions to, please tell me so that we build this group to something beautiful. This community, sorry, to something beautiful. You get it? So yes, again, I've done longer than what I wanted to do. So yes, we hit our target. We could have waited for 100% level, but that takes a lot of patience, a lot of waiting. Let me see. It took how many days even? It took 58 days for it to get to our 62% level swing projection. So most times we aim for the highest point, or sometimes we leave an open position for it to get to at least 27%. Then as for that one, we exit because from there we don't know what else is going to happen. You see. Now let me give you the last scenario that I wanted to give you. Then we close. Please. I've taken a lot of time. I think it's getting close to 2 hours. So now let's say we did not catch all this. Let's say this happened before we were able to understand forex, to understand price action, and to know what to do with price action. So now what do we do? Now this whole swing point, we anchor it all the way here, and what do? We wait for price to get to 50% level. This is going to take a lot of waiting. A lot of waiting. You can see that from this point to this point, price has not come all the way to 50%. Now we can put it here, we can extend it here because this is where price has reached now. You understand? But forget this too. Look at this again. Look at this. This is the one we did, and then this is the result it got us. This is the one we did, if you can remember. It got us this result. But now let's shift our focus from there to here. So now we are looking at this, the highest point in what? In price. We are looking at the highest point. We are looking at the sharp moves in price. You understand? So from here to here, we understand it was an impulsive move all the way up to this point. You get it? So now we anchored it to this point. And when price came all the way down, what happened? See, oh, I told you you can exit at highs, old highs. So see, it didn't come all the way to, look at this, it didn't come all the way to 62. That's why I say sometimes you can have early entries. That also depends on how you position your stop loss, because you're not just going to leave your stop loss anywhere. Sometimes it can come at 62, wake you out, and then go to where it's supposed to go to. You understand? So when you set your stop loss, you go on the lower time frame and try to refine it. You understand? And based on what the lower time frame is doing, you adjust your stop loss. And then I'll teach that as we go further. So please don't be scared. Okay. Now, when it got to the 50% level, it went below it small. It didn't enter the 62% level, but look at what happened. Look, price went up again. It went up all the way here. Look, it took out this high, and what happened? It started coming down. So when I say old highs, I don't expect you to pull it all the way here. If you can see a high over here before this one, please, you can wait for that high. You understand? Right? Sometimes you can extend it here, and then you just be monitoring. If you see price behave any way that suggests that it's going to keep falling, liquidate your liquidate your trade, and then you can wait for another setup. You understand? So look, it hit the 50% level, and what do? We see that it came all the way to take out this high. You see, now as time went on, it didn't come all the way here to take out this high. However, we still have this high in mind as a target. We still want to target this high and take out the profit that is at this high. So what do? We can still wait. Since it has not come up all the way up to take out this high, we can still wait. When it came all the way down to the what? I'm going to get rid of this one. Bullshit. Now I'm talking fast because like I'm trying to rush it because a lot of time has been spent. When it came all the way over here, look at this now. You can see the reaction at the discount level. I always love the discount level. Look at this. If you don't want to pull your stop loss all the way down, and then as time goes on, I'll teach you types of order block. There are certain cases where you don't have to extend the order block, extend your stop loss all the way to the end of this order block. You can see something here, right? See, but I'll teach you. Let me not confuse. Let me not load everything on. You left your phone, eh? Yeah, I was about to send it to the security men. You are fortunate, oh. Like somebody go, you did? Uh, uh, ah, you are welcome. Guys, somebody left his phone in the law school. I came here and then I saw their phone. I was like, if I finish my session, I'll send it to the security men. Charlie, people are busy. Oh. Somebody is so busy that he has forgotten. Just say, Wako Ben he went to write exams. Wako Ben he forget say he gets phone himself. He left the phone. The phone was lying here, and nobody is in this class. I could have just taken it and gone. But I don't desire phone. I desire knowledge because it's very, very tempting. If you see the phone too, it's a nice phone. Okay, so you see discount level, boom, all the way to this point. Now let's measure that. 670 pips. So you see, this is what frames our idea of what? Of discount and then discount and then what? Equilibrium and discount, equilibrium and discount, equilibrium and discount. You understand? So as time goes on, I'll start sending into the group a certain information, certain terms that I'll be using. You'll be able to understand them because look at this one too. Now, Jafet, this case, it passed the 79% level. Look at this. You see, but when it passed, it didn't close below it. It didn't close below it. You see, it didn't close below it. If this one had closed below it, as for me, if this one had closed below it, is someone trying to join? Okay. If this one had closed below it, then me, I will seriously start doubting this trade. I might even liquidate some of my positions. Do you understand? So when you see an impulsive move upwards, then you start having a mind that market makers are trying to do what? They are trying to reposition price. What am I going to do? Just going to anchor my fib 50%, 62 all the way to the discount, and then what? I put my position. Honestly, I'll tell you this. I don't look out for 50% because 50% me, I don't like seeing drawdown in my account. So sometimes I just leave it at the 62. I aim for the high and then I take my money and then I'm off. What I do is when I take my money, I just do what? I just close my computer, my laptop, because I don't want to see other things. I know who I am. I know there's mono. I know that there's one there. Ugusu share price now. We try, 1, 2. So I'm now teaching myself these things again. I will try. In fact, I will not even try. I will go and enter another trade because I've learned to a certain point where sometimes I feel overconfident. And then as traders, you come to deal with this thing a lot. Most traders have a problem with overconfidence, you understand? I'm just too confident that this trade won't lose, that I enter the market and then it loses. Then it reminds me that no, I don't have to have this mindset if I'm going to go forward in trading, you understand? So that has been it. So if you are going to go on, please look out for impulsive price moves. And then those of you who trade smaller time frames, that's why I didn't go on a small time frame. This is the daily time frame. Take your context from the high time frames because you can go on a 15 minutes time frame and you see a big candle. The candle will be so big, you think that hey, market makers are trying to reprice price higher. You come on the daily time frame and you see it is just one small tiny candle. You understand? So please your context to be from the higher time frames. The lowest you can watch for these kind of moves is the 4 hour time frame. Take your framework from there, and then you see great results in your trading. So I hope today was very impactful. I hope you learned a lot, and then that will be the end of today's session. Thank you very much. Thank you very much. Okay, now next, if you have a question. Ah, shit. I didn't want to do this nose thing in the audio, but I did it. Shit. I forgot myself totally. Now, next, if you please, you can ask your question. Your mic is still muted. Okay, then maybe it was a mistake. So I hope it was impactful for you. I hope you learned a lot. If you have questions, you can ask before I end it. If you don't have questions, then I can end it straight away. But please, when I post the videos, please go back and listen. There are many things I said inside that might have might have gone over your mind, because that's how the mind is. Most times, people cannot keep focus for like 30 minutes. Even me, that I'm saying I can't do it. I can't keep my focus on one thing, sir, for 30 minutes. So what I do is I go back and learn and learn and learn again. Then I realize, oh, I missed this, I missed this. So yeah, please, you can.
Okay.
Yeah, I can hear you perfectly.
Okay, so I tried backtesting with FX replay. At the moment, I can't get access into it. So I just want to know if there are any sites or websites I can access for free. Emphasis
Okay.
on the free.
Okay, I also tried to use FX Replay sometime because I was broke. And yes, it was normal for me. You understand? But I came to understand that if I am doing you see, sometimes FX Replay, okay, my experience of FX Replay is when you exit the site and you come back, it loads all the price data. So you have to start again. That was maybe they've updated. Yeah, so you are confirming it. So maybe they've updated, but from what you are saying, I'm thinking they've not updated it. So what I was doing was that I like to take screenshots when I'm back testing. I take screenshots of instances in price. I put them in my PDFs, and I have many PDFs like that. I can show you. Here we come. Here, sorry, not this, not this. Get out of my face, not this. Okay, here we come. Documented finding PDF 1. So this is what I do. I take screenshots of what I have seen, and then I put an interpretation on it. You see, I put the screenshot in the PDF, and then I put an interpretation on it, and then I file it down. So sometimes when I'm sitting down, I just go over and read my PDFs again, and then I am hoping that in the future it will be enough for me to um, write a book. You understand? But why do I say this? I say this because TradingView is the application I use. You understand? TradingView is what I've been using, and I tried using FX Replay because I was broke, and then I couldn't afford any this thing to backtest. You understand? But I've come to understand that if TradingView is what I'm going to be using, right, the fact that I have paid for it, right, makes me understand that in 1 month this thing is going to expire. So what do? I have to utilize every day of that 1 month. Do you understand? Unless something takes my time away from it at all. You understand? So sometimes when you get it for free, you tend to undermine it. Do you understand? But apart from FX Replay, I don't know any other free website. But for TradingView, I understand that if you pay, I think I paid 180 for 1 month. Was it $14? Yeah, 180 for 1 month, and then it benefited me a lot. In fact, after that 1 month, I didn't have to renew because I got a lot of information. Do you understand? So if you are using free platforms, you tend to, most times, it distracts your backtesting because now you have to go back again, you have to start again. But emphasis, if you don't really have the money, right, if you don't really have the money, then you can really dedicate time to be going back and then be cutting again and again and again. But as time goes on, I'm planning to try and gather some money to pay for those who want to understand price action on a different level. I want to pay for their trading view back testing for them for a month to see how uh, how best they can utilize it, you understand. So as time goes, if I see that okay, you are gaining the knowledge, you're asking the right questions, you are finding some setups, and then you are ready to go into backtest. And backtesting too is a whole different thing, right? To be able to backtest in the first place, you have to have a system, a trading system, a trading plan. You understand? So backtest is not something you just jump into. And then I hope we can get to the trading plan development series early. I've already planned the whole how it is going to go, and then if we are done with that, you guys will have models. So please watch the videos. We'll come back when we are doing the trading plan development, because I have spilled a lot of models to tackling trading inside these videos, but you will not know because you've not yet been taught, you understand. So when we start the trading plan development, we'll come back and then I'll teach you the models and how to attack your trading day with them. Do you get it? So now if I don't know any other trading platform that offers backtesting for free. I stuck to TradingView because I was also looking for a lot of free platforms, and then I ended up entering certain sites that installed, Bitcoin miners. People are so malicious, I'm telling you. They'll install something on your laptop. So you see your laptop running slow and misbehaving. Bitcoin miner is in. So while you are working, your laptop too is working for somebody. The person is getting money, understand? So in search of free products, I damaged myself. And also, so I just was like, let me just, it's 200 CDs. Let me gather it and pay. Then I paid for it. So please guys, don't fear. We are growing as a community, okay? If I have to pay for some people uh, who are eager to understand, or who are yearning to get this knowledge, or eager to understand this knowledge, I don't mind paying for a back testing for you, because I understand that cash is hard to find sometimes, you understand. So please, if you can stick to the FX replay for now, just stick to it so that you understand the consistency principle, so that it doesn't leave your hand, you understand. But if you are getting it, the more you advance in understanding the concepts, then we'll talk about trading view payments, okay? But if you have the money to, you can go on and pay for trading view. So any other questions? And then Sophie, I hope I answered your question right.
Yes, yeah. Thank you.
Okay, you're welcome. Paul, any question? Daniel, any question? Japheth, any question?
No, no question.
Okay, you're welcome. Okay, Japheth, how about you?
Have some few misunderstanding something you said, but since you'll be posting the video in the group, I'll just go back and then watch.
Okay. Japheth, how about you? Okay, so I'll just assume that Japheth's network got fucked up again. Sorry. It's foul language in my mouth. Charlie. So I'll meet you guys next week, and I'm yet to decide on a date that will be having the meetings continuously, you understand? So guys, please bear with me. I'll make sure everything is fine. And then if you have ideas to contribute them, okay, you can talk to me privately before we put it in the group. You can also go straight for it and put it in the group. Then we'll all think about it, and then we'll settle it over there. So thank you for your time, and we'll meet next week. Bye bye.
Thank you.
Okay, bye.
Thank you for making time for us. NSS, the same, keep it like that.
Okay. The NSS day inside why I put the date for weekend, because as I they do for weekdays, as he say squad no really they join because they have work, and then I don't want to do like, okay, you are in the workplace so you have to tune in. It's a lot of it, they stress people, it they wow. So me, I don't like stress, so so you wow. Okay, so yeah, I was
Shit.
okay. You're welcome. Okay. Okay, so bye.